Magnus Heystek, he is still over the sea, not in Europe or America, but in Mauritius. You got a love for this place, Magnus?
Indeed. It's fortunate that I can spend a bit more time now that the youngest is out of school. So there's a bit of a freedom for mom and dad. So, yeah, we're loving it. It's the first time I've spent winter in Mauritius, and it's surprisingly pleasant. So, yes, we're loving it. Thank you.
Well, a little bit like Durban's winter.
Yes, to a certain extent. You're quite right.
But you're also not fretting like many people in South Africa are. The opportunity to have taken money offshore when the Rand was 14 or even 15 now seems to have been, a missed one.
Possibly, yes, indeed. I mean, if you look at what's happening both in the Rand and Mauritian properties, they've both escalated. And it's becoming almost unaffordable for many, many South Africans, and unless they're kind of super wealthy. So that's just unfortunately one of the effects. There are other ways to retire in Mauritius without buying property, but the property route is closing very rapidly purely because people say, yes, that's expensive. You can retire on a retirement permit or occupational permit, but the property route is closing. The prices are galloping. There's very little to buy. And now that the Rands also crashed, that's added another dimension to it.
Magnus, when we spoke last with Piet Viljoen, you were taking a lot of pain. The Rand was strong. The JSE was doing well. International investments, obviously, with the Rand strength, were not doing as well as one had anticipated. But I remember you saying, well, it's a long game, this. It's a 5-year game. With the change in what we've seen in the Rand in the past couple of weeks, really, does that now transform a investor's picture?
Dramatically. I mean, as you point out, the first 6 months reporting was at a very good time for Pitt and his portfolio, and a very poor one for me. And I track these things, and the situation has recovered fairly dramatically. It's like a horse that starts out late out of the stalls, and you 6 or 8 lengths behind the leader, but now you 2 lengths behind the leader. So there's been a sea change in the relative performance between SA and your offshore funds. In fact, I'm amazed how quickly it has happened, but it's like a 20% swing in relative performance.
That's extraordinary.
In 3 months.
What caused it?
Well, first of all, you had the Rand weakening from 1440 to 1725. And also Pitt's fund started dropping on the basis of the commodity cycle. So Pitt's fund has dropped in Rand terms and in dollar terms at the same time. Whereas the offshore funds are starting to recover, and now the Rand's also weak, so suddenly the offshore funds are galloping again. And, it's quite dramatic how quickly it can turn around.
And behind that, the reason for the Rand's weakness and the dollar strength?
How much time have you got, Alec? I mean, it's first of all, it's a dollar story. It's not only, in that respect, it's not only South Africa, but we're in that emerging market basket. And we're being slaughtered alongside with Hungary and Philippines and South Korea even. And it's just dollar strength. So that's the first factor. Fund managers are getting out of emerging markets, including ours. And they tend to choose the weaker, fragile fund managers when that happens. And that's exactly what's happening now. So you have the dollar strength. You've got the potential for rising interest rates in the US. And then lastly, the potential for a recession in the US. And there is our danger when people say, is the Rand drop over? I say, I don't know, but if you look at history, when the US goes into a recession, commodities collapse and the South African currency collapses with it. So the currency can go, I'm not saying it will, it can go to as low as 19, even 20 in the next year and a half, should the US go into a recession. But there's not finality on that issue yet, but it looks like that way. And then, of course, the local factors also suddenly regain prominence, like the Eskom situation. That really has added a little, extra dimension of negativity to South Africa, where the big investors are saying, wow, there's a country that's within hours of a total collapse of the grid. Let's just get out of there just in case.
I had an interesting chat yesterday with Arno van Helden from Shift, and they've got a really smart foreign exchange app where you can transfer your money pretty quickly. And as we know, you can do it in South Africa now up to R1 million, no questions asked. But I asked him what his clients were doing. They're part of Standard Banks. They've got lots of clients there. He said they seem to be a lot smarter nowadays. When the rand is strong, they move more money into US dollars. When the rand weakens, they move less. But he said recently, with this push above 17, there's almost, I wouldn't call it a panic, but there's almost a move back to also taking money offshore just in case that suggestion that you had that the rand could go to 19 or 20 might eventuate. Are you seeing that with your clients as well?
I think clients, the experienced clients tend to understand the cycles much better. It's the inexperienced clients who have to make the call for the first time, and they normally get it wrong. I mean, I recall very clearly 3-4 months ago when the rand was at 14.50, we were telling some of our clients, now is the time to buy. You're buying your US markets cheaper, and you're buying it with a stronger rand. And lo and behold, they will say, but I read this report from a South African fund manager that now is the time to buy the JSE, etc., etc. And of course, they've lost out on 30% in 3 months. So the amateurs, if I may call them that, they tend to react on what's happening now. The very good, astute, longer-term investors tend to follow the cycle much better, and their buying is much better because they've gone through the cycle in the past. Some of our smartest clients approached us and said, here's another 1 million or 5 or 10, because they do follow the markets. As they internationalize their global portfolios, they tend to read more on the global stuff than the local stuff.
That's so interesting, because if you go back 10, 15, 20 years, there wasn't half as much information available as there is today. And certainly there's a lot more independent information available. People like you, when you talk on Biz News, people listen, and we can see it. We see from the podcasts we do, from the articles that you write, that there's a lot of interest in what's going on. And presumably, by being better informed, individuals can take more advantage rather than maybe listening to somebody who's unfortunately got an agenda or vested interest.
Indeed, Alec, if you go back in time, 20 or 25 years ago, offshore investing was illegal. So, and since then, there's been a massive switch into offshore investing. And one of late Mike Schuessler's graphs showed clearly that South African investors now have more money offshore than local foreign investors have in South Africa. So the smart longer-term investors have externalized a very large percentage of their liquid assets by now, and therefore they need to follow the Bloombergs. They need to read the Wall Street Journal via Biz News, of course, and they need to be up to date with what's going on, because the world out there is so much bigger. And the opportunities are so much bigger. As you see in the returns of your offshore portfolio, those are the returns that the investors have had. And now here comes a situation which you might want to pick up one day. Local fund managers, offshore fund managers, may not compare returns. They may not do it publicly. They may not name company versus B. It's up to the press and independent commentators like ourselves. We can compare it, but by some regulation, fund managers may not compare their returns to other funds.
Now, just explain. Explain that. I don't understand that.
Well, let's take a company, Abacus Investments, have got 7 funds. Mm-hmm. They would like to compare the returns of their funds to other South African funds or offshore funds. It's not permitted in terms of the FSCA regulations. They may not do it.
That sounds like craziness to me. Surely that's vested interests of the guys who aren't that good.
Of course. So that it protects the bad ones. So no fund manager will ever get up onto a platform or in an article and say, Abacus Fund A has beaten Polygraph Fund B by so much they're not allowed to do that. They might say Fund A versus Fund B. There's only independent columnists like myself who can come out and say, this fund has done the best, and here is its name, and that fund is the dog in the parlor. This is its name. So we can publish the names. There's nothing that restricts the press or commentators, but the fund management houses are not allowed to do that. So to a large extent, clients are being kept in the dark almost deliberately, but they are smart. They will find out. There are lots of ways to find out, but fund managers may not compare funds.
That's extraordinary. You'd almost think that there's some smart fund manager would take it along to the Competition Commission.
Well, it would not be a fund manager. It'll have to be someone from the public who goes and say this is not acceptable. But it's not a big issue. If you have independent people writing for you, they will publish the results. It's just, just thought I'd mention that it still exists. That rule still exists in South Africa.
What about the future, though? Now that the Rand has gone from the early 14s to over 17, are your clients, are you advising them to take more money offshore today or to sit tight?
Alec, it is a dilemma for us now. I mean, a currency that crashes or any instrument that rises or drops so quickly in such a short space of time runs the risk of clawing back some of its losses, and that may happen from today onwards. We don't know, but you weigh it up against the longer term objectives. What do you intend doing with your money? Are you buying other assets on the other side? How much money have you got? It's a long process, and in many cases, we tell people, look, if you have, let's say you've got 5 million to invest. We'll buy $1 million today, buy $1 million a week or two later, or a month later, and try and get it right, but you'll never get it absolutely spot on. I always say if you have the cash to buy a dollar investment, buy it. Because remember, you're also trying to time the Rand and you're trying to time the offshore assets or whatever it might be, let's say the US stock market. And to try and to get it correct both ways, the Rand and the offshore market, impossible. We tend to say, if you buy now because you're buying something cheaper on the other side.
Magnus Heystek of Brenthurst Wealth, and I'm Alec Hogg from biznews.com.